And this is a way for me to be transparent of my trading and to show you really what's going on. It's not something a lot of traders do, and I don't do it to show off, because if you've seen the past 2 months of all my losses, I've also been pretty transparent with that. How's it going? It's Rocky. Welcome to my content that I like to call my 5 to 9 after the 9 to 5. So this is week number 23, and I am continuing the trend of just trading the E-mini, specifically the YM, which is the Dow Jones Industrial Average. And you can see here from this weekly chart, this is for the entire week of week 23, you can see a lot of the volume profiles here, which is pretty much shows you when the US market is. So you saw that I did trade on Monday, a bit on Tuesday. Wednesday I didn't trade at all, and then in the evening, Wednesday night, I traded a little bit, but then after that I avoided trading Thursday and Friday. And really, one of the main reasons that I did that was because the contract was rolling over from June to a September contract. So if you looked up here, what I'm actually showing now is a September 2022 contract. And this is very important when you trade the futures. And for Thinkorswim, you can pretty much see these deadlines that are very important when you go to Market Watch. And then from Market Watch, you can go to Calendar. And on this calendar here, you could select whatever you're trading, whatever that ticker symbol is. For me, it's YM. I disabled the rest of them because if you have that up there, you'll have a lot of other things that will be showing up. So all I care about is the futures liquidation date. And you see that the futures liquidation date is on Thursday, June 16th. So really the contract rolls over from a June to the next one, which is September. And when that happens, the market gets a little tricky. So I try to avoid those 2 days just in case I get myself stuck on a trade. And of course, with the volatility that we're already going through anyway, it makes it really tricky to be to trading in this atmosphere. And also something I wanted to show you is when you go up here on trade, and if you look at whatever futures you are trading, you can see that basically Thinkorswim, they automatically rolled it over to September. And I believe they based that off of the volume. As you can see, the U22 right now has more volume than the June 2022 contract. But something I've noticed, it may not be volume dependent. I've always noticed that the Thursday prior to the liquidation date, the system itself pretty much rolls it over for you. So it's something to be aware of when you're trading the futures, because when I started trading it a few years ago, that definitely was something I was not expecting. And just because I haven't done it before, it was the first time seeing it was a bit concerning. But now, it's a normal thing that you need to look for when you trade the futures regularly. So I'm actually recording this week's content a little late. It's now Sunday, June 12th, about 5:53 p.m. in the Pacific Coast. I normally do this right when the market ends on Friday. But anyway, just wanted to go through some of the trades I had last week. I got some good feedback that me going through the actual trades, trade analysis, which I used to do a lot every week when I traded more, is actually quite helpful. So these are 2 trades that I wanted to talk about, and this happened during the US market. And since the US market moves a lot quicker, I've been depending more a bit on the tick-based chart. And if you've been following me for a while, you have a good idea of what the strategy I use is. But if this is your first time checking out my content, check the description below on what I use to enter or exit a trade. It's not a big secret at all, because it's a very common strategy where you use the MACD, and a lot of traders do combine that with the RSI or the stochastic RSI. For me myself, for example here, since I'm depending more on the tick base on the right, you could see that when I saw the stochastic RSI going to the oversold side, which is when I like to short, and I was seeing a bit of a divergence there, that's when I started to short. And it doesn't line up with what I normally look at with both the time base and tick base, but because I'm trying to get myself used to trading the US market again, it's a lot more faster. I'm really just relying on the tick base. And with this one, it just shorting with one contract, and basically we went from 956 to 932. So that's 24 points. So really 24 points times 10 for one contract, that's about $240 for that trade there that lasted pretty much less than 5 minutes. The second trade I want to talk about here, I'm going to zoom in a little bit here so it's a lot clearer. I did go long on this position, and this one in a way followed a bit more of the rules that I have on the description below. But with this one, again, I'm relying more on the tick base. You can see that after it crossed over on the right here on the MACD, and that the stochastic RSI is overbought, that's usually when I like to go in a long position. And if you look at the corresponding time base, you don't see much of that really. So harder correlation to see during the US market, and this is why I'm relying more on the tick base. Again, I use the two charts because it helped me a lot when I was trading during the Asian and European markets when things are slower. But during the US market, as you know, most of the volume in the world trading occurs during the US market. And that's why I'm in the process right now of adapting to that, because I do want to go back to trading more during the US market. Now here is our account statement for the week. I am showing it from Sunday, June 5th to Friday, June 10th. And this is a way for me to be transparent of my trading and to show you really what's going on. It's not something a lot of traders do, and I don't do it to show off, because if you've seen the past 2 months of all my losses, I've also been pretty transparent with that. Now, looking at that description here, you can see that I did trade exclusively the YMs, and I did not deposit or withdraw any money from the account, so we don't need to alter our ending and starting cash. And for the week, we had ended at $38,018.12, and our starting cash was $34,522.02. So for the week, we had a net profit of $3,496.10. Now, if you divide that by 40 hours for a regular 9 to 5 in the US, that would have been a hourly rate of $87.40. And then, of course, because we all trade at different levels, our account size are all very different, where we all take different position sizes. This is why I go through the percentage, because that's really the important part when comparing, if you'd like to compare, which I don't really suggest you do, but if you were to compare with others to measure yourself, I guess, to someone who you deem as successful in the trading world, percentage-wise is a good way to do that. So with our gain of $3,496.10 for the week, divided that by their starting cash of $34,522.02, and I'll multiply that by 100 so it's clear. Pretty much for the week, we had a net gain, a profit of 10.13%. So quite a good week. And I know it was a tough week overall for the market. I'm really glad that I stayed away on Thursday and Friday, because I have a tendency to catch a falling knife. And because I stayed away, that was one way for me to avoid jumping into that drop, the significant drop that happened on Thursday and Friday. And as you can see, it is currently happening right now, Sunday, because I am recording this on June 12th. Anyway, please do like and subscribe if you haven't already. And if you didn't enjoy what you saw this week, give me another chance. And hopefully on the next content, you like what you see. All right, have a good one.